Yo, what's up everyone? It's your boy Looney, and today I'm breaking down how my 50,000 portfolio is holding up, the recent moves I've made, and what I'm doing next after another red day in the market. Right now, my portfolio is sitting just around 49,000 or just below 50,000, down from our recent high of 51 or close to 51,000. I wasn't right at it, but I was very close to getting that 51,000 mark. So what's changed? The market is reacting sharply to news that Iran struck back at Israel after last night's attack. So geopolitical tensions are heating up and it's showing up in stocks. But before we get into this video, I do want to do a quick shout out to the Discord community. It is free to join, and then I also have a premium version, and it gives you access to trade alerts, one-on-one coaching. There's a course, and I do giveaways. You can check it out. All links to it will be in the description. So that uncertainty does bring volatility. A lot of my covered calls are now out of the money, which is very good. I'm currently up $400 on today, or up 11%, which, like I said, it gives me room to reposition and keep collecting premium and not having to roll. So coming up, I have a $14 call on SoFi, a Riot 9.5, a Mara 16, another Riot at $9. So I have a few that expire next Friday. And with that, I might not have to roll because if they stay out of the money, I will have the option expire worthless and collect or realize that gain of the premium and then do the same strategy again. So really, it just gave me breathing. Additionally, earlier today, I did open up some options and I gave these plays to my Discord community, and I give them right away. As soon as I do these trades, I write it to the Discord. So I sold some cash secured puts on Mara, and I'm looking to keep working on these types of setups. But doing this, I also reduced my available cash. So now I only have $4,600 in cash, still ready to deploy, but I am being cautious. But if we go back to my options, go to these Mara puts, I think I opened up this $13 put, was open today, and then perhaps another one, 13.5, another one opened up today. So about a 2,600 locked in these cash secured puts, and I get paid to do these. And that's the way cash secured puts work. You sell a put and you're basically agreeing to buy the shares at that price. So I agreed to buy it at 13 or 13.5 if the stock drops to that price, and I'll acquire 100 shares of that stock. So I have a few. So you can see my collateral is 6,800, meaning that if Mara drops significantly below my strikes or just drops below all my strikes, I will acquire 6,800 worth of Mara shares. And I'll be buying them at these strike prices, which is actually a good thing because it is below my average cost of $16. And I still have more cash on the side to deploy at lower strike prices. You can also see my credit spreads there. But this is where discipline does matter. I did open up these trades today, but I'm not going all in. Just because things are red doesn't mean you should go all in. I know some people that made no trades today because they weren't confident that the market would recover and that we would see more downside. Now that is possible, and if that happens, I will be prepared to deploy more capital. And after acquiring these shares, I could sell covered calls and run the wheel strategy and also generate more buying power from that by doing the covered calls. So you can see the wheel strategy is very effective. Selling puts, selling covered calls is a very effective strategy in building consistent income. So I decided to be opportunistic and not emotional. I did some plays today, didn't go all in. And right now my focus is very simple. I'm selling puts at levels I actually want shares at. So although Mara dropped and my other shares did drop, I'm not going in on them because if you look at, I have it set to my total return on all my stocks. Mara is my worst performer out of the ones that I'm building. And that's why I chose that one. Even SoFi dropped significantly today, and I do like SoFi long term, but I want to be in a position where I could take advantage of my average costs. So I held off on buying or selling puts on SoFi and Riot, and instead just did Mara because of my all-time returns. Another thing that I'm focusing on is keeping cash ready in downturn extensions, because I don't know if this is going to end next week or next year or never end, and we're going to go into a world war. Hopefully not that, but who knows? And if that does happen, I do want the cash available to deploy. So I'm also just managing my current open positions, especially those spreads and covered calls. We are seeing that my covered calls are actually in a better position right now. The past week or past month was a little bit of a roller coaster. If you go to my realized loss or gains past week, I am down 143. And that's because I did have to roll it because Riot and my other shares were running up significantly, and rolling when stocks are running up high, you generally have to pay for that roll. And that's what I did. And that's why my total return is down 143. But ever since this red days or these 2 red days, my covered calls have some breathing room, and I'm up $400 just today from that. And my SoFi calls are looking a lot better. My Riot calls, which were deep in the money, and they're still in the money, some of them, but overall they're in a lot better position. My Mara one is pretty far out. My Delta is at 26, and I actually would, if I were to open up the trade, I would choose a 26 Delta. So I do like where I'm at with that. And then also my credit spreads, because these are a lot more defined risk, defined reward. And I did these purposely when I saw opportunity, when I saw Mara and Riot and SoFi hitting levels that were overbought. And although I wasn't expecting this sort of event, I was prepared for a pullback. But this one was a little bit bigger than expected. And I do have some HIMs that is in a sticky situation, because if we do see more downside, there's a chance that I will have to manage this. So I'm managing my covered calls, managing the spreads, and also the selling, the cash cleared puts I'm obviously managing as well. Might need to close those early or just get a sign. Last thing is to not panic sell. We are seeing these red days, and now my week, I was up at 1.2% or almost 3%, up 1,300, and now I am red from just these 2 days, just wiped out all my gains. But I'm not panic selling, because then you realize a loss. But just overall, I'm looking at long-term growth, and I feel in the long term, the markets will recover. So therefore, my long-term plan hasn't changed. I got to 50K through consistency, selling options, dollar cost averaging, and staying cool through volatility. The same mindset applies right now. Just like before, I'm building my way back up, one move at a time. And if you want real-time trade callouts or want to learn how to run these strategies, hop in the Discord. It's free to join, and then the premium gets you my full course, alerts, and one-on-one coaching for just $8 a month. Until next time, peace.